the agro-commodity trade then, where chana gained on fundamental factors such as lower domestic supplies and the prospect of costlier imports overriding moves of hike in the trade margins by the authorities to curb higher prices. The rupee, which has declined by nearly 9% since the start of March, is expected to push up the cost of imports that will be needed to meet the robust demand. So there you have chana prices declining sharply during the closing. But remember, the prices have seen levels like 4,200 as well. In spices, turmeric hit an upper circuit on strong buying supported by decline in supplies. There was an upper circuit on cardamom as well on reports of crop damage in Kerala and the biggest producer Guatemala as well. Cardamom prices have been gaining for last 2 or 3 sessions and today have closed the markets at around 1,318 rupees per quintal there. Pepper prices also gained on weak supplies and reports of depleting stocks and lower output. The only decliner in the spices was jeera, and profit-taking came there after prices have gained nearly 8% in the month of April alone. The rise in Malaysian palm oil prices due to lower stocks has lifted the Indian soy oil prices as well today. The oilseed traders are also awaiting a key soybean supply-demand report from the USDA or the US Department of Agriculture, scheduled for the release later today. NCDX in the meanwhile has postponed the launch of October expiry soybean contract. The October 2012 expiry contract is now rescheduled to be launched along with the November 2012 expiry contract on 11th June 2012 according to a notification from NCDEX. Let's go across then to Sandeep Bajoria. He is CEO Sunvin Group and he joins us on a Mumbai phone line. Mr. Bajoria, hi, welcome to the show. Let's start with the notification from the exchange first. And what does that mean and why have they taken that step?
See, that is because the new season begins from October onwards. So they want the futures to remain open in new season. And when off season is there, they want those months compared. So I think that is the decision from they have taken. This is what the natural process, for a regulator to take a decision.
What is your view on the prices? Because the global prices are on the higher side. Do you think that would continue to support the Indian prices?
See, global prices were going quite high. There was a very good run in last 8 weeks. But we see on last 2 weeks, we saw the market had shaded considerably. The prices have come down for example, soy oil, it went to as high as $1,350. CIF India, and it came down to $1,250. So it knocked off $100. And crude palm oil from 1,205. CNF India, it came down to 1130, 35. So prices have corrected considerably in last 2 weeks. And however, in the meantime, rupee has depreciated in India. So ultimately, whatever corrected in the abroad markets has not been seen in Indian markets, but we have still seen that prices have come down by 30 rupees 10 kgs, 40 rupees 10 kgs in the Indian market. Today, NPAB report was friendly. The stocks have come down 5.1%, and USDA report is going to come in next 5 minutes. Okay. I believe that report also is going to be neutral to mildly friendly. So market will stabilize at these levels, and then there are some reports of El Nino also going in the air from striking Southeast Asia from outwards. So if that really materializes, then prices stabilize at these levels and then slightly start going up.
All right, Mr. Bajoria, we'll let you go at that. So some profit taking has been seen in the recent days. Some consolidation is what you can expect in the edible oil space. And then again, a hike up from those levels is the view coming in from industry.